Welcome to today's deep dive. I'm your host, and today we're looking at some pretty wild data from the Seoul Economic Daily.
And I'm your resident finance expert here to help unpack it all because honestly, Korea's most solid housing loan product just took a massive hit,
Right, yeah, it dropped by $1 billion in just 6 months.
which is huge.
Exactly.
Yeah.
But at the exact same time, overall, household debt skyrocketed by nearly $5 billion. So we are digging into this bizarre divergence today to figure out why.
Yeah, it's a fascinating contradiction. I mean, it fundamentally challenges how bank analysts and regulators even measure credit risk in the Korean banking sector right now.
So to really get why this matters to you, we need to quickly touch on the Korean Jeonse system. It's a totally unique housing setup. Basically, instead of paying monthly rent, you hand over this massive lump sum deposit to your landlord.
Yeah, and we were talking like 50 to 70% of the property's entire value just paid up front.
Right. So it acts almost like a giant interest-free loan that the landlord can go off and invest. Yep. And then when your lease is up, you get that massive deposit back in full.
Exactly. But recent macroeconomic forces really fractured that whole model. I mean, when interest rates spiked, tenants just couldn't afford to take out bank loans to cover those huge deposits anymore.
Oh, right. So the interest on the Jeonse itself became too expensive.
Yeah, exactly. So it pushed everyone into regular monthly rent. And now monthly rent actually makes up 68.6% of all rental transactions across Korea.
Wow.
Yeah. And in Seoul, it's hitting a record 69.9%. Which means Jeonse loan balances at Korea's 5 major banks just shrank by 1.5 trillion won.
So that's roughly $1 billion US, right?
Yeah, in just 6 months.
Wait, hold on, though. Because I'm looking at these numbers and, well, the math isn't really mathing here.
How so?
Well, if these huge Jeonse loans are evaporating, like dropping by $1 billion overall, household debt should be shrinking too, shouldn't it?
You would think so, yeah.
Right, it's like, swapping out the entire concrete foundation of a skyscraper block by block. But total household debt actually grew by 6.8 trillion won.
Right, which is about 4.9 billion US dollars.
Yeah, over that exact same period. And the total debt at those 5 banks now sits at 774.5 trillion won, so roughly 553.2 billion US dollars. I mean, how does debt go up when your most popular loan product is literally disappearing?
So that is the exact paradox putting analysts on high alert right now because, to keep that skyscraper growing, banks are swapping out that super stable foundation of low-risk Jeonse loans.
Okay, and replacing it with what exactly?
Well, with different, potentially much riskier types of household debt.
Yeah.
Just to keep their loan books expanding.
Which sounds like a massive headache if those newer loans start defaulting.
Precisely. So for analysts and regulators, here comes down to 3 things. First, banks are losing one of their most stable, low-risk lending categories.
Right, the safe stuff is just gone.
Yeah. And second, that creates a major net interest margin, or NIM, drag. I mean, banks are basically forced to replace that volume with riskier products that, cost more to service.
Which eats right into their profits.
Exactly. And the third thing is the regulatory trigger. The Financial Supervisory Service, the FSS, is watching this household debt shift super closely. We are looking to see if they issue updated risk weight guidance for Jeonse loans.
Oh, wow. Which could dramatically reshape how banks allocate their capital by year end, right?
Absolutely.
So if you are a bank facing this huge NIM drag, how do you even fight that? I mean, you can't just snap your fingers and fix the macro housing market.
No, you definitely can't.
So it looks like they are heavily relying on tech to slash costs instead. Like they're getting super aggressive with artificial intelligence. Take Shinhan Financial, their AI transformation generated 652.3 billion won.
Wow.
Yeah, so that's about 466 million US dollars in cost savings just last year alone.
That is a massive operational shield.
It really is. And KB Kookmin Bank is fiercely targeting 15.22 million monthly active digital users. They're basically using AI in massive digital scale to defend those shrinking margins.
It is a huge pivot. So, if you are watching the K2HPI or tracking the broader market, here is a wild card to look out for.
Right on us.
As the safe Jeonse lending pool dries up and household credit risk migrates to new areas, keep a really close eye on how consumer credit companies reposition themselves to grab these new revenue streams.
Oh, like Hyundai Card, right? They just launched that independent alphabet card brand.
Right, exactly. Rolling out 6 new products just to capture market share in this newly shifting landscape, it is definitely the space to watch.
Makes a lot of sense. That's today's AI PRISM, Finance Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a Win IFRA award-winning series. We'll be back tomorrow.